Welcome to Daybreak Australia. I'm Haidi Stroud-Watts in Sydney. We're counting down to Asia's major market opens.
I'm Annabelle Droulers in Singapore, and the top stories this hour. Asian stocks set for a positive start in a week that will be dominated by data, including the Fed's preferred US inflation indicator.
G7 finance chiefs blast China's trade practices and threaten tougher protections for their economies and critical industries.
And Israel's military presses ahead with its incursion into Rafah in southern Gaza, despite a world court ruling ordering it to stop.
Taking a look at how we're setting up at the start of this trading week, obviously geopolitical elements are really at play there with that G7 story, as well as, of course, the latest tensions in the Middle East. But this is the picture for Sydney. We're looking pretty positive, 0.6% higher. Asia stocks are set to climb sort of quite broadly as we see this rebound of risk sentiment. We had the Wall Street session a little bit higher on Friday. Consumers there tempering inflation expectations, and that sort of brought back sentiment that the Fed may have room to cut rates this year. It really has been this back and forth when it comes to easing expectations that have been driving some of the moves in both directions when it comes to those markets, and that's passing through to the Asian session. New Zealand, though, we're off by about 0.5%. We are headed into, in the next few days, a delivery of the budget there. So that's one story to watch for Kiwi markets. Nikkei futures looking pretty flat at the moment, and A50 China futures are up about 0.3% at this point, Bill.
Yeah, Heidi, let's take a quick look at how US futures as well are trading this morning. We actually have markets that are going to be shut Monday for Memorial Day, but still we're just online here, very steady so far this morning. Something else that traders are going to be coming back to on Tuesday, it's actually the new T+1 rule that's going to be coming into effect. So US equities are going to be settling instead of in 2 days, it's actually going to be down to 1 day as well. As the question, of course, is how the financial plumbing handles that changes here. For Treasury futures, again, fairly steady here. You've got oil that's just trending around that 3-month low. Big question marks around where we go in terms of the stocks moves from here. Deutsche amongst those saying that we can continue around all-time highs. Bank of America, though, Heidi, is saying that the rally is looking a little bit overheated, but really comes down, of course, to the Fed moves as well.
Which seems to, in terms of expectations, move on any given day, and that is sort of the volatility that we're still expecting as the data comes through, right? But take a look at what we're expecting when it comes to the week ahead. Eco data out of the US, of course, top of the agenda for that very reason. Bloomberg Economics expecting the Fed's preferred gauge of inflation to moderate to its lowest monthly pace this year. There's also a revised reading on US first quarter GDP that could show growth cooling from the government's initial estimate. The Fed also issuing its Beige Book report that's out on Wednesday. Here in Asia, China's monthly business surveys are expected to indicate the factory sector is holding up. We get a separate gauge of industrial earnings that could show profit growth returning in April as well. For Japan, we're watching Tokyo's May inflation rate. That's seen to be climbing on higher utility rates. We'll also be looking at national factory production. Retail sales are coming through, and labour market data for April as well. That is your week ahead.
Well, Heidi, let's get more on that now. Bringing us in from Hong Kong is Gary Ng. He is Senior Economist for APAC Thematic Research at Natixis CIB. And Gary, I think we can look a little bit bigger picture here, but just broadly in the disinflation narrative, because we've spoken so much about concerns around stickiness, around concerns of structural issues that will be harder to bring down. But when do you think that the Fed and other central banks are going to be confident that they can cut rates? Is it when you get to that target band, or do you think it's a little bit sooner, given you've got that lag transmission effect as well?
Well, I do think that there could be a divergence among global central banks in coming quarters. And of course, on the one hand, the Fed will see stronger pressure to actually implement a rate cut because the situation or the inflation environment is simply more sticky than the others, and the economy is not doing too poorly. However, if we look at Europe or a lot of Asian central banks, then it is really a trade-off between the prices going down, even though it may not be as quickly as expected. But growth pressure will start kicking in. So I do think that in the short run, we will start to see some more central banks acting, even though the Fed may not act as early as expected. It will probably first start from Europe, then we will probably also see some move in Asia as well.
Yeah, because Gary, speaking of Asian central banks, we have seen them really constrained by the actions of the Fed. So which ones are you looking as most likely to move, and who has the greatest capacity as well?
Well, I do think many Asian central banks, they are facing different sort of difficulties. And of course, one of the biggest challenges is really about this capital flows due to the yield divergence with the US. Then, of course, Japan will probably see a move to actually hike rate further because of the very difficult situation that it is right now with the weaker yen. But for the rest of Asia, it is really about when inflation can actually start coming down. So I think the more certain move will probably also come from China, which is possible to see a further rate cut. But for the others, it's kind of in a mixed situation about the wait and see to see when inflation data will actually come down.
We're expecting to hear from Governor Ueda later on today. In terms of the setup for the BOJ, is it a matter of buying time until we get a clearer direction from the Fed? And how do you expect potentially more bouts of, structural yen weakness could be a problem?
Well, indeed, I think it's hard to anticipate the yen to appreciate too much in the short run for two reasons. The first, the yield divergence with the US will continue to be quite wide. So it's really about the story from the Fed, not only about the BOJ. And second, when we look at a lot of services price in Japan, indeed, there is a structural acceleration that corporates are more willing to hike wages as well. So this will put BOJ in the denial in, prices are going up, yen may be weakening further, but economic growth may not pick up as expected. So yes, I do think the pressure will probably still persist, and it's hard to see the BOJ turning to a too, dovish tone, even though we may see some short-term economic weakness.
When it comes to some of the geopolitical risks, we've been talking a little bit earlier, obviously this key trilateral summit, but the key sort of pressures of China overcapacity that are impacting a lot of trading partners, do you expect this kind of to be a thematic going forward too?
Well, indeed, this is probably one of the biggest themes that we will see ongoing in 2024. And I guess one of the biggest problems that China sees right now is that there are indeed a few so-called spotlight sectors, such as electric vehicles, batteries, and also solar panels with quite a good export performance. But this channel may eventually be blocked by a lot of other countries because of the worries about the overcapacity issue. And I think if we look at it from an even bigger picture, it is really not only about G7 or the West, because we see India, Brazil, Mexico, basically all the other countries are targeting different products that China may be exporting. So yes, this is definitely one of the biggest challenges that China will face, and also it's really about how the world would be able to negotiate with China in probably containing the worries.
Does the leadership have many other effective choices when it comes to, triggers to boost growth, right? Because the domestic expectation of consumer sentiment and households being boosted seems quite weak at the moment. So do they really need to rely more on this industrial policy?
I think, indeed, if you look at what happened in China in recent years, there is indeed quite a strong pivot towards manufacturing, which has led to some of the phenomena that we see nowadays. So manufacturing production capability has increased, but utilization rate has declined. If there's not enough demand domestically to absorb everything, then of course it's a natural choice to seek to overseas market. So export is definitely one of the short-term driver. But when we look at it from the China economic structure, indeed consumption investment are continue to be more relevant than export over years. So boosting consumer confidence will be one of the key factors to see whether China can actually reach the 5% growth rate in 2024, and we're likely to see more policy support coming up in July.
Gary Ng, who's a senior economist for APAC Thematic Research at Natixis CIB. Really great to have you with us. Well, still ahead, we'll be talking BOJ policies with SBI Financial and Economic Research Institute. The former Bank of Japan board member Takako Masai joins us later. But first, China asks South Korea to maintain stable supply chains as both nations begin their first three-way summit with Japan since 2019. This is Bloomberg.
India decides. As the votes come in, can Prime Minister Modi win a third term? And what direction will India take next? For with a focus on the economy, social divisions, and climate change actions that will influence the global story. Bloomberg's Haslinda Hamin is live in Delhi, bringing you the latest updates as election results from the world's largest democracy are revealed. Coverage starts June 3rd on Bloomberg Television. Context changes everything.
Our general view is that it is really important that the world does not unintentionally creep back into protectionism. So our starting point is that we really think hard before imposing tariffs or trade remedies.
We agree at the G7 level that we have an issue with the Chinese industrial overcapacities. And this is not a question, anything against China. China is an economic partner. But we have an issue with the economic model in which China is producing more and more cheaper industrial devices. Because it could be a threat not only for the EU, not only for the US, but for the global world economy.
That was the French Finance Minister Bruno Le Maire and UK Chancellor Jeremy Hunt speaking to us at the G7 Finance Ministers meeting in Italy over the weekend. And that gathering actually ended with a communique that criticises China's global trade practices and hints at possible retaliatory measures. Our Chief North Asia correspondent Stephen Engel joins us for more. And Steve, these words, it really was a very marked escalation from what we've typically seen around language on trade.
Yeah, this G7 meeting in Italy was, I guess, going into it, the speculation would be that they would focus mostly on engineering aid for the Ukrainians. But it really did, in that final communique coming out of Italy, was a very pointed jab at China, naming China by name, essentially saying, on the one hand, reaffirming our interest in a balanced and reciprocal collaboration with China, but we express concerns about China's comprehensive use of non-market policies and practices that undermine our workers, our industries, and economic resilience. They went on to say that they will continue to monitor the potential impact of, as Bruno Le Maire said, overcapacity, and will consider taking steps to ensure a level playing field. Yes, there was a united front, but on the other hand, you also heard from the Chancellor of the Exchequer there, Jeremy Hunt, in a Bloomberg interview, essentially saying, you know, it's really important that the world does not unintentionally creep back into protectionism. So on the one hand, of course, everyone wants to do business with China, but they, at the same time, they want to try through the G7 at least, which, of course, China is not a member of, to level the playing field. It's going to be a long road to hoe, obviously. On Friday, U.S. announced it will reimpose tariffs on around 400 products from China, basically allowing tariffs exclusions to expire that had been spared up until now. Those are Trump-era tariffs. So, again, there's more pressure, obviously, being led by the United States, but G7, at least on the shores there of the lake in Italy, showing a united front on China's trade policies.
And this certainly makes very interesting background in terms of the G7 trading partners as we get underway with this first trilateral meeting between China, South Korea and Japan since 2019, right? So we already have heard a little bit of discussion about supply chains, but what are we expecting here with this meeting?
Well, the three leaders had dinner last night. They will have that summit, an exceedingly rare opportunity. They have not had this trilateral summit between South Korea, Japan, and China since 2019. So pre-pandemic, and a lot of issues obviously have risen to the fore. At the same time, where we've had sort of a shuttle diplomacy develop between Japan and South Korea. They have vowed in their internal meetings between President Yoon and Prime Minister Kishida to continue that warming of relations between Japan and South Korea, which, of course, have more aligned in recent years with the United States. And again, there's increased pressure from Washington for Japan and South Korea to add on to or to further support the export controls of advanced semiconductors as well as the chip-making equipment. Japan last year agreed in the first round of export controls, but has been kind of resisting and pushing back to further add to their list of export controls to China. Now, this comes at a time, obviously, of great importance for China. It's an opportunity, essentially, for China to improve relations with two of its most critical neighbors without the United States sitting at the table. Li Qiang, the premier of China, has already met with the two. Obviously, they all had dinner. But he also met with J.Y. Lee of Samsung Electronics. And they said, the right things about or at least Li Qiang did, about opening up and, leveling the playing field, if you will, for investment into China. So he is trying to court South Korea and Japan at a time when the United States obviously trying to do the same thing.
Our Chief North Asia correspondent Stephen Angle there, and some of the other geopolitical stories that we're following. NVIDIA boss Jensen Huang and a bipartisan delegation of U.S. lawmakers have arrived separately in Taiwan. Huang has often highlighted the role Taiwan plays in AI supply chains, while the legislators are due to meet with the president, Lai Ching-te. The visits come after China wrapped up its largest military drills around the island in a year. The U.S. has since accused Beijing of military provocations. North Korea has given Japan notice that it intends to launch a rocket soon to deploy a satellite. According to Kyoto, the window is open through June 4th. North Korea said it successfully deployed a spy satellite last November, a move that Washington and its allies say violates UN Security Council resolutions. Ukrainian President Vladimir Zelensky is urging leaders of the US and China to attend a summit to discuss Ukraine's peace blueprint. The appeal comes after Ukraine said Russian bombs hit a store in Kharkiv over the weekend, killing 12 people and wounding dozens more. The peace summit is scheduled for June 15th to 16th on the back of a G7 meeting in Italy. Well, Israel is pressing ahead with its operations into the southern Gaza city of Rafah, despite a UN court ruling that ordered it to stop. The advance comes after dozens of people were killed in an airstrike near the city on Sunday. For more, let's bring in Bloomberg's Michael Heath. So this was sort of, in a sense, always going to go ahead.
Yeah, that's exactly right, Heidi. I mean, the strike that's the Hamas-run health ministry says has killed 35 people. Israel says they had precise intelligence on a target, but it was in an area where Israel hadn't given evacuation orders or encouraged people to leave. But they say that they did hit high-level Hamas targets there, and that was the justification for it. Now, they're reviewing the incident, but you're exactly right. In a built-up area, when you try and launch some sort of missile or strike there, you're always going to have collateral damage. And it comes at quite a difficult time. We had the court ruling on Friday saying that Israel should halt its Rafah operations. Now, it was initially interpreted as they should stop. What the court, when you read into it in detail, said is that basically they should avoid civilian casualties. Again, exactly as you say, how can you do that in a very, very built-up area? Now, 1 million people have left Rafah, have tried to move out of there into other parts of the Gaza Strip to try to avoid the fighting. But again, Hamas is sort of popping up all over the place. So it just seems likely that we're going to continue to see this spiral of violence. It's hard to see how Israel can abide by what everybody wants, and it can't stop until it's finished as well.
And Michael, negotiations for a ceasefire are supposed to be recommencing this week. How does this latest offensive really jeopardise those talks possibly?
Yeah, look, I'm not sure if it does, Annabelle, but I'm not sure the talks are expected to get too far either. Where they left off, and my understanding is that there's been no progress since that. Where they left off was Israel agreeing to a pause in order to get its hostages or some of its hostages released. Hamas then writing back with its own version that Israel would stop the war. And all sides, Qatar, the US, Egypt, said that from there that they can try and make progress. So they're meeting again. The heads of intelligence of the US and Israel and Qatar's Prime Minister to try to bridge that divide. As to the strike, I mean, Hamas, in many respects, Hamas sees these sort of civilian attacks as almost a benefit for it, as terrible as that sounds, because it just intensifies international opinion against Israel. And you can see this in the court ruling. I mean, Israel's international room for manoeuvre is getting less and less and less. But as to the release of the hostages, it's difficult to see where we're going to see progress on that, given that there's such a structural divide between the two.
So Hamas launching missiles again at Tel Aviv. You've got Zelensky, on the other front, trying to convince world leaders to kind of pay attention to this peace summit, right? That China has its kind of own plan. Biden's got a fundraiser, so he won't be there. The bandwidth seems very stretched right now.
It does, and just by the nature of it, because of the Israel-US relationship, it's just, and the Republicans are so strong, obviously, on their support for Israel, that it's always going to take priority over Ukraine. I mean, the strike on the supermarket was horrific. I mean, it is equivalent to what's happening in Rafah there as well, but it just does not get the attention. And you have to feel for Zelensky, because Ukraine is trying to find a way out of this now. I mean, I think they recognise they're not going to be able to push Russia back. But without China and without the US there, then you don't have any power brokers. It's almost irrelevant. It's a talk fest. So he's really in a bind there. And even the vice president isn't going to go there. And China and Brazil saying they're going to have their own version of it. It's likely to be pro-Russian. It's not going to be acceptable to Ukraine.
That was Bloomberg's Michael Heath there. And don't forget, you can get a roundup of the stories that you need to know to get your day going in today's edition of Daybreak. Today, it's really about those stories we were just discussing with Steve Engel there, Chinese trade practices, also that trilateral between China, South Korea and Japan. But it's available on DB Go. It's also available on mobile in the Bloomberg Anywhere app. More ahead. This is Bloomberg. Some of the stories that we're tracking this evening, or this morning rather, the US Department of Agriculture has banned imports of some poultry products from Australia after an outbreak of avian flu. The restrictions will cover both birds and eggs and remain in force until further notice. The curbs only apply to products from the state of Victoria, where around 400,000 chickens were reportedly culled last week in a bid to contain the outbreak of H7N3 bird flu. Bad weather hitting the Philippines as the country's first storm of the year intensifies. Official warn warm tropical storm Aghorn could strengthen into typhoon before leaving the Southeast Asian nation on Wednesday. Authorities say about 7,000 people were stranded in various seaports, while some flights, Heidi, have been cancelled.
Take a look at how we're setting up when it comes to currency trading this Monday morning. Of course, that key inflation gauge will be the one to watch in terms of the next direction for the US dollar. We have seen something of a recovery in risk sentiment, of course, in the last sort of couple of sessions or so, with the hopes that perhaps there is room for easing still yet. The Aussie dollar could be set up for a bit of weakness going forward. Pretty steady at 66.27 at the moment, but the hopes that we'll see more strengthening beyond really that closely tracked level of about 69 US cents could be disappointed. There's more concerns about the fading in the China economic rebound, the sort of weakness in property policy and local economic weakness as well. We're up about 2% since May for the Aussie dollar. Dollar China is also pretty steady at the moment. And of course, when it comes to dollar yen, 157, we'll be watching very keenly, or just under 157, I should say, Bell, very keenly for any remarks from Governor Aweda when he speaks a little bit later this morning.
Yeah, Heidi, because last week he was really as well signalling perhaps a level of comfort with the 10-year yield for JGBs sitting north of that 1% mark. But this is the outlook here for equities. Again, it's fairly mixed. We don't have US futures that are, US markets are going to be shut Monday for a public holiday. But still here you've got futures fairly flat, looking a little bit mixed. Aussie stocks pointing to a move high at the open here. Geopolitical questions in focus too, with that trilateral between China, South Korea and Japan. More ahead. This is Bloomberg. Well, concerns over a two-speed global economy skewed by US strength and European weakness were a hot topic at the G7 meetings in Italy. OECD Secretary General Matthias Cormann told us more about the growing challenges.
Many of the debt issuance will have to be refinanced and refinanced at higher rates, and the challenges here are obvious. And so what we've been warning of is that there is a real need to rebuild fiscal resilience and to have credible medium-term strategies in place to address the debt challenge.
And when you look at the sort of the list of risks across the world, right, whether it's inflation, growth, geopolitical, what really worries you the most right now?
Well, look, I mean, the key risks that we're focusing on, obviously, there's a risk still that inflation proves to be more sticky than anticipated, but conversely, there's also the risk that monetary policy measures will overshoot and that we end up with having too hard an impact, and that is something that remains challenging to balance moving forward. But then the geopolitical risk is the very significant risk, because I mean it's sort of very hard to see how you can take effective action depending on where you are in the world, but you are on the receiving end of potentially very significant economic and social implications, of course. I mean, depending on what happens in the Middle East, we could see another supply shock. We could see another supply shock causing an inflationary increase, and so I mean there are of course things that are not immediately under the direct control of countries in other parts of the world.
OECD Secretary-General Matthias Cormann there speaking with our colleague Oliver Crook. Well, the Korea Exchange CEO has urged directors of listed companies to play a more active role in enhancing shareholder returns. Yoon Eun-bo says that in a statement that the boss is seeking cooperation and from corporates on the government's so-called Value Up initiative. On Monday, the exchange is launching a website to allow firms to start disclosing their targets and plans. A group of minority holders of insurer Great Eastern are resisting a $1 billion takeover bid from OCBC. The group of more than 100 shareholders says the offer to buy 11% of Great Eastern is around 25% Singapore dollars. That is a deal per share, and that is too low. OCBC says the number reflects a roughly 40% premium over the price in both the month and the year before the bid announcement. Australia's pension giants are eyeing niche private credit debt products as the industry seeks to diversify its portfolios and boost returns. Let's bring our superannuation and pension funds correspondent, Amy Bainbridge, who joins us now in Melbourne. So, Amy, what kind of credit products are we talking about, and that's sort of looking at interest here?
Good morning, Heidi. Well, that's right. The Australian pensions now, I guess, are looking even further into these kinds of products to try and beef up their returns and diversify their portfolios. We know that AMP, one of the biggest pensions and private wealth money managers here in Australia, has recently launched a $300 million debt fund looking at some of these products and looking really at credit risk transfer, which is one of the different kind of products that's perhaps more commonly seen in parts of Europe, for example, but now seems to be making its way to Australian shores, especially here as the Australian pensions just continue to grow in size and scale. We know that the pension funds are also already putting a lot of money into private credit as an asset class. I've had multiple conversations over the past week, meeting with funds, talking about their plans. In the past 6 to 12 months, the biggest pension fund, Australian Super, has said that it's significantly increasing its allocation, and its rivals such as Cebus and Host Plus are also beefing those up. The other areas of the market that they're looking into are credit risk transfer and distressed credit. So these are the kind of more esoteric products, as they're described by Nuveen, who is one of the biggest asset managers here in Australia working with pension funds. There's a lot of interest in these more niche products to see what returns can be had and how they can balance their portfolios as they get into private credit more and more.
Yeah, and zooming out a little bit, as you said, private credit, it's very attractive for Australian pensions, but why is that exactly?
Well, they're flush with about 2 billion Australian dollars in inflows each week. There is a lot of money coming in from these compulsory contributions from workers' salaries right across the country, and basically the funds need to put that money to work. Now, there's only so much that you can allocate to the stock market, for example. We've already seen very big slices of the local share market here being taken up by the Australian pension fund. So really, this is just a story of growth. It's a story of how big the industry is getting and continuing to grow. Currently, 3.7 trillion Australian dollars under management by these big pension funds. There has been a wave of consolidation across the industry. We are waiting to see if there's going to be more mergers, but as more money comes into the industry, they're looking for more ways to juice those returns, and this is just the latest iteration of what these money managers are thinking about.
What kind of deals are we talking about? Like, what's sort of being looked at here?
Yeah, it's interesting you should ask, Heidi, because there's been, I guess, a real push by the pension funds, or superannuation funds as we call them here in Australia, to move offshore. We know that about half of assets owned by these pension funds are overseas now, and we've seen some of the biggest funds open up offices in London and New York, and they're really eyeing deals. Primarily, it seems, with these private credit deals at the moment in North America and in Europe. Some of the pension funds are looking for these kind of mid-market corporate debt deals. Others are really zooming out and looking for these bigger, more diverse companies that they're looking for lending deals of. And the size of these deals, I think, as we go forward, are going to be of the scale that we have not seen previously here, because we know that some of the pensions are increasing their private allocations, or they have aspirations to increase to as much as 6% of their overall asset allocation. But at the moment, it does seem that the deals don't necessarily seem to be here in Australia. There is so much interest right across Europe and North America, and they're really using those offices as their bases as they hunt for those deals.
Bloomberg Superannuation and Pension Funds correspondent Amy Bainbridge there in Melbourne. Let's take a look at how we're setting up. We're just, about 25 minutes away from the start of cash trading here in Sydney, and opening across some major markets in Asia as well. Sydney futures actually looking pretty positive, 0.6% higher. We're broadly seeing the opportunity for gains here in Asia, particularly as we had a pretty strong handover from the US in the previous session. Some of the consumer inflation expectations getting a bit of a reset as we get into a week that will give us that preferred gauge for inflation for the Fed, and that will kind of cement these hopes that the Fed may have room to cut rates later on this year. But we did see, of course, Asian stocks more broadly seeing their worst week in more than a month last week. These worries over the pace of easing, the timing of easing, the doubts of implementation and the effectiveness of property rescue policies out of China as well really weighing. Kiwi stocks, though, already on the back foot this Monday morning. We're seeing Singapore Nikkei futures trading pretty positively. S&P futures are looking a little bit more tempered there. A big focus when it comes to Japan as well, particularly in terms of the direction of the yen and where the BOJ can go from here. The economy firmly in focus. We're awaiting that speech from the BOJ Governor Ueda, a little bit later on this morning. The former board member Takako Masai will be joining us next with some of her expectations. This is Bloomberg. Time for Japan ahead, and Tokyo Shimbun is reporting that the Constitutional Democratic Party's Ranho Murata will be running for Tokyo governor. Over the weekend, Yomiuri reported that the incumbent governor, Yuriko Koike, will also be running for a third term as the independent candidate. We're watching shares of Nadec when the market opens in just about 20 minutes. It announced that buyback of 35 billion yen in shares. And of course, the main event for Japan watchers, we're awaiting Governor Kazuo Ueda's opening remarks at today's BOJ IMES conference taking place in Tokyo, Bell.
Yeah, going to be very closely tracked by market participants, Heidi, especially when you put it in the context of where we've seen certain Japanese assets trading. You've got the Japanese yen, of course. It's been very sensitive to that yield gap between the BOJ and the Fed, and also just tracking what's happening with longer dated securities in particular, because we've seen that 10-year yield hitting a 12-year high on Friday. But so far, the indication we're getting on that is that policymakers are pretty comfortable with it.
Yeah, pretty comfortable, and perhaps, at least not at the levels where the BOJ might be willing to take action, right? Let's bring in terms of these Bank of Japan expectations, Takako Masai, who's the chairperson at the SBI Financial and Economic Research Institute. She previously served as a board member at the Bank of Japan. Really great to have you with us, and I appreciate your time. So, Governor Ueda, when it comes to the direction of these yields, seem pretty comfortable. He also seems pretty comfortable with the broader trajectory of growth. The sort of weakness we've seen in GDP doesn't seem to indicate a derailing of the BOJ's path. What are your thoughts on that?
First of all, I don't think the governors or any board members yet to be able to say the comfortable regarding all the macroeconomic situation in Japan, but all those messages or communication from the Bank of Japan side, it seems that they are comfortable with the current macroeconomic data, but they want to be very, very prudent to make the hike decision very much prudent. However, there seems to be they are more prioritized to make the yield curve steeper rather than the interest rate hike on the short-term interest rates. That's something my take from the whole communication, including summary of the opinions released early this month.
What are your expectations in terms of the yen? Obviously, so much of this is sort of down to the Bank of Japan just having to tread water until the Fed does something. But do you think further structural weakness in the currency is going to complicate the policy-making abilities of the Bank of Japan?
I would like to focus on the message or communication from the Bank of Japan. According to those communications, as I said, they like to move the short-term interest rate very prudent way, meaning that it's for the yen weaker, right? And also if they really stay the short-term rates very lower, meaning that the real interest rate on the short term remain in a very low, meaning that theoretically it will be back up by the or back up for the yen weakening. So I will not be surprised that if the yen keeping in this low level for a little bit longer, because of the according to their communication, it's justified.
Takako, there is a concern that the weak yen will start to impact consumer sentiment. How strong is the consumer within Japan, do you think?
Oh, I'm one of the consumer, and then I do really, have a feeling that the yen is so weak. So as you said, this is sort of the side effect of the current monetary policy. Any policy must have some side effect. When I was when I was a board member, the scale of the scale of the policy was a side effect. But now it's a yen weakening is a side effect to, for the aim to make sure that they want us to make sure that the complete exit from the deflation. But now it's kind of balance to be needed. The too much yen weakening, as you said, and I feel the too much yen weakening is already harm some of the activity of the consumption. So they need to make more balance in a good way. That's what I thought.
And how are you seeing that really impacting, or where is the biggest impact from that weaker consumer sentiment? Do you see it in terms of household spending power, or do you see it in the reluctance of companies or businesses to pass those higher costs on to consumers?
The difficulty is, they are aiming to see the wage increase and transformation into the pricing decision. But as you said, if the consumption is weaker, meaning that the company tends to hesitate to hike the prices, meaning that the good mechanism could be deteriorated to achieve their purpose. So it's a kind of a trade-off situation. So they need to modify somehow, and then they will really looking into it right now to hike the interest rates and then make a balance between the too much weaker yen and to prevent from such kind of a bad side effect into the real economy.
I think you hit the nail on the head when you talk about the policy balance and the challenge for the Bank of Japan between the compression coming from the exit of deflation and that contrasting too much with the gap between the BOJ and the Fed policy, right? Do you think there is a right balance, and how difficult is that going to be?
That's the point, because as I said, from the whole communication in this month, from the summary of opinions or the comments from the governor himself, it seems that they are focused on long-term interest rate or yield steepening, but not for the short-term interest. So that's why I'm not sure that how they really think this current real economy situation by the weakening yen. And they need to make some communication on this aspect.
Yeah, and you talk about the idea, of, I guess, of a stress test, right? Because we've looked a lot about the impact, obviously, of an exit from deflation and an exit from negative rates in Japan. But do you think we should be looking more at what it means for broader global investment if rates in Japan are back to 2 to 3%?
I think they need to communicate a little bit more in terms of the short-term interest rates, and then that to be able to control the expectation among the markets on the currency market, I guess. So this is something they need to do so.
Takako, what's your expectation around how much room the BOJ has to move this year? There are some people that are saying perhaps we could still see 3 hikes from here.
It really depends on the real economy. But if the economy stays like expectation stays like current situation, and then I think it will be okay for the like another one or two times hike, end up like a 0.5% or so.
0.5%. And so when it comes to, as you said, it depends on where the economy goes from here. What are the brighter spots that you're seeing? Are you seeing any sort of change that's come through in the mindsets of individuals that we were talking about, but corporations as well?
I think the corporations or CEOs' mindset had been changed quite a lot for the inflationary, and also the household as well. This is for the first time ever happened in this century among Japanese people. So I think that's why the BOJ wants to make sure that everything okay, but that at the same time they have to deal with the side effect, which is weaker yen. So it's kind of it's really difficult path still. They have to, but I'm sure that the bright side is the corporation has a good result, and also they have enough capability to make investment for the future. So that's a bright spot, and then I hope that the policy and also the people who accept that policy could work well towards the completion of the exit for the deflational spiral in Japan soon.
Stability has been key here, but there was a time when we were talking about 3 arrows, right? And several of those arrows kind of got left by the wayside. Do you think there needs to be a renewed focus, perhaps from the government side as well as the BOJ, to think about longer-term drivers for growth and reform, particularly in light of demographics?
Of course, we do have such a long-term issue, but has been tackling with it over like 2-3 decades as well. So the key is productivity. To make it the productivity more higher, it's easier if we have a reasonable size of the inflation. So this is huge difference from the other countries' policy or countries' situation. So we need to accept this kind of a situation, meaning that we need some sort of the side effect. But if we don't do that, the economic growth will not be sustainable. So I think this 1 or 2 years' time is very important for the long-term Japanese economy as well.
And in dealing with those longer-term challenges, Takako, but particularly around the demographics challenges as well, what do you think, or what change do you think in Japan is needed now, or needed most urgently?
To make it productivity higher is a priority, and also it could be possible because if we could adapt all those technology thing, it's really normal things to say. But the important thing is in terms of the inflation, if we think, the shrinking of the number of the labor force with the higher productivity, if we think about inflation, it will be higher than the past. And then I think including Japanese people and also the markets people are not really used to it. The third or fourth largest economy have an inflation coming 10 years' time. And then we need to think about how the investors in Japan, the behavior could change or not. And then if they change, then how it looks like to be. So that's something we need, if we're looking at the investment space, we should consider or examine or practice what's going to happen if Japan has like a 2% inflation in the long run.
Takako, really great to have you with us. Takako Masa, who's a chairperson at the SBI Financial and Economic Research Institute. You can catch Japan Ahead every week. That's at Monday at 8:40 a.m. if you're watching in Tokyo, 7:40 p.m. on Sunday evening in New York. Bloomberg subscribers can also watch us live on the terminal using the TV Go function. This is Bloomberg. Take a look at how we're tracking when it comes to trading in currencies. Of course, big week potentially for the US dollar as we look ahead to the Fed's preferred inflation gauge and whether that really supports some of these hopes kind of coming back into the markets that we could see sooner easing than later, with the inflation expectations in Friday supporting what was a return of risk appetite, if you will. Some concerns, though, that we could see headwinds when it comes to this 2% rally we've had this month for the Aussie dollar, with these worries about that rate divergence as well as implementation concerns of Chinese economic policy at play here. This is Bloomberg.